So the four propositions before lunch is that reforms to the financial system, the $300 trillion of assets that we have in the global financial system, are a key part of the transition. That these interventions are needed to complement the existing tools: resource pricing, carbon pricing, environmental regulation, public finance. Policymakers can make a difference in four main areas: on risk, on capital mobilization, on transparency in markets, and also in financial culture. And also, I think importantly, this year, as Professor Töpfer highlighted, this year there are new opportunities for international cooperation, not just within the UNFCCC, but also in other international areas. What is the inquiry? The inquiry was set up in January 2014 by UNEP to try and answer these three questions. Why should the rules governing the financial system be aligned to sustainable development? What rules are actually being changed around the world, and where should we be focusing? And how do we do this, particularly in the context of very complex and competitive markets? We are doing this from the bottom up. We're working in many, many different countries, in East, West, North, South, in China, Bangladesh, Brazil, here in Europe, in the United States, and in different parts of the world. And this is for us important because it means that our work is grounded in what is happening in different countries. It's not just at the international level. Here in Europe, many of us have been discussing a new tool called environmental stress tests, bringing future environmental scenarios into today's financial decision-making. China heard this idea, and now the leading bank in China is starting experimenting in terms of pilot stress tests, in terms of what the transition to a more pollution-free economy could mean. And finally, the third country is my own, the United Kingdom, where largely due to the work of Carbon Tracker, and Mark Campanale will be speaking after lunch, there is now a much stronger focus on how the carbon transition impacts financial regulation. Three areas. First, the prudential regulator that governs insurance sector is carrying out a review of how climate change will affect the safety and soundness of insurance companies. The report will be out next month, so I'd look out for that. Secondly, the Financial Stability Committee has also been looking at climate change, and interestingly, they have highlighted that, in a sense, obviously, that the implications of climate change fall outside of their normal policy horizon. And if you read the quote at the bottom from the governor, it's important to see that it's not just markets which are short-term, but often many regulators too, that actually the regulatory horizon from central banks can be quite short, 1.5 to 2 years, and therefore regulators and perhaps also investors face a tragedy of a horizon. How do we overcome this short-term time frame when we are dealing with climate change? And one area is research. All central banks have deeply skilled people doing financial research, and the UK central bank is now including climate change into that research. Clearly, there is an immense amount of innovation within the financial system. That 2-degree financial system would mean steering that for climate security. It would mean making every capital decision within a carbon budget. Particularly for developing countries, it would mean ensuring there is universal access to green finance, particularly banking products and insurance products. It would mean closing the protection gap. Only 1/3 of the people on the planet have proper insurance against the risks that climate change will exacerbate. And finally, it's about making the financial system itself more efficient by including the full costs of environmental damage. And I'd like to close here with a quote from Atiyah Rahman, award-winning governor of the Bangladesh Bank, who is seeing how the integration of sustainability factors can be a factor for improving overall financial stability. For him, green finance is a strategic goal to reduce risk, to support investment, and build a more resilient system. Thank you very much.